I'll never forget the exact second it happened. I was mid-coffee, scrolling through charts like any other morning, when the alert popped up. Nasdaq just went live with the first ever HBAR ETF. For a split second, I froze. My heart did that weird flutter thing that only happens when you realize the world just tilted, because this wasn't another rumor. This was real. HBAR, the project everyone once called too quiet, too corporate, too slow, had just stepped into Wall Street's front door. And right then I thought, if this is true, what happens next could rewrite crypto history. If you're interested in this topic, hit the like button, subscribe, and type interested in the comments, and I will give you a heart. I'll be honest, when I first saw HBAR ETF trending, I thought it was a prank. We've seen fake posts, doctored screenshots, clickbait thumbnails, you name it. But then the ticker appeared, officially listed under Canary Capital Group, LLC, trading live on Nasdaq. Let that sink in. This isn't a crypto exchange listing. This is Wall Street, the same floor where Apple, Amazon, and Tesla built their legacies. For years, Hedera Hashgraph was the quiet genius in the corner, the one everyone underestimated because it didn't scream hype. While other blockchains threw marketing fireworks, HBAR was sitting at the grown-ups table with IBM, Google, Boeing, Standard Bank, and LG building something real. And now that patience just paid off in the loudest way possible. A fully tradable spot ETF. What does that mean? It means institutional investors, the ones who control billions, can now legally and directly invest in HBAR through a regulated product. Pension funds, retirement accounts, wealth managers, they can finally touch HBAR without needing a wallet or exchange account. That's a financial floodgate being unlocked in real time. Here's the wild part. When the ETF launched, HBAR's price jumped 17% in a matter of hours. But the real story isn't the pump, it's what kind of investors caused it. Because according to CoinGlass data, there wasn't a huge wave of futures trading. There wasn't massive leverage. This wasn't retail gamblers piling in. This was spot buying, clean, organic, long-term accumulation, the kind of movement that doesn't vanish overnight. And that's exactly why this ETF changes everything. Futures traders chase adrenaline, ETF investors chase legacy. One plays for weekends, the other plays for decades. But let's pause and appreciate the irony here. The same people who once said HBAR will never compete with Ethereum are now watching it become the third crypto ETF ever listed right after Bitcoin and Ethereum themselves. Out of over 19,000 cryptocurrencies, HBAR became number 3. Not Solana, not Cardano, not Avalanche, Hedera. Now, think about the signal this sends to the entire market. The institutions didn't pick another hyped up DeFi project. They didn't pick a meme coin. They picked the governed enterprise grade, compliance ready network that's been quietly running billions of real transactions for the world's biggest companies. That's not luck, that's strategy. And it gets better, this ETF isn't alone, it's just the first domino. There are 12 more ETFs that directly reference HBAR already filed, from Grayscale, ProShares, 21 Shares, and Osprey, among others. Some track the top 10, top 20, or top 50 cryptocurrencies. Guess who's inside all of them now? Yep, HBAR. And here's what most people don't realize. ETFs are like digital billboards for legitimacy. When big funds rebalance portfolios every quarter, they buy what's inside those ETFs automatically. That means passive exposure. Every time an investor buys a crypto index fund, they're also buying a slice of HBAR. That's the moment we stop being speculative and start becoming systemic. And I'll say this, as someone who's been holding since 4 cents, this feels different. Back then, we were the weirdos at the party talking about Hashgraph technology while everyone else was chasing meme coins. Today, that same weird project just made history. So if you're watching this right now, don't blink, because what's about to follow isn't just another price rally, it's a financial rebrand of HBAR from underdog altcoin to Wall Street asset. And we've only just turned the ignition. There's a saying in crypto, the loudest projects make the smallest moves, but the quiet ones make history. And that's exactly what Hedera just did. While the rest of the market was busy chasing hype cycles and meme tokens, Hedera's strategy was simple. Build, test, and wait. They weren't racing to be first, they were waiting to be ready. And that patience has officially paid off. Because this ETF isn't just a trading symbol, it's a validation stamp, a signal that the institutions who run the financial world now recognize Hedera as more than a blockchain project. They see it as infrastructure. Let's look at the details. The ETF, launched by Canary Capital Group, went live on October 28, 2025 with the ticker HBR. It's a spot ETF, not futures, meaning every share represents real HBR being bought and held in custody. That's a direct supply squeeze. When you buy a share of this ETF, you're literally pulling HBAR out of circulation and locking it away. That's the kind of economic gravity Bitcoin's ETFs created earlier this year. And now Hedera is getting the same treatment. But here's where it gets interesting. The Hedera Foundation confirmed that this launch makes HBAR the third ever cryptocurrency ETF in history, following Bitcoin and Ethereum. Third, not 10th, not 20th, third. That's legendary. Think about what this says about Hedera's positioning. Out of nearly 20 million tokens tracked by CoinMarketCap, regulators, auditors, and fund managers combed through every candidate, and they chose this one. And the crazy part, this ETF isn't even the biggest one coming. It's just the opening act. There are multiple filings still pending, from Grayscale, 21 Shares, Pro Shares, Rex Osprey, Crane Shares, and Coinbase, all planning HBAR inclusive ETFs. Some are single asset products, others are index bundles tracking the top 10 or top 20 cryptos. But no matter how you slice it, they all lead back to the same place: Hedera's door. And that brings us to the bigger picture. Why Hedera? Why not Solana, Avalanche, or Cardano? The answer lies in what Wall Street craves: stability, compliance, and performance. Hedera isn't just another decentralized network. It's governed by Fortune 500 companies: Google, IBM, LG, Boeing, Deutsche Telekom. Real names with real reputations. The governance model ensures no single entity controls the network, and the tech stack, Hashgraph consensus, asynchronous Byzantine fault tolerance, ABFT, delivers enterprise-level speed and security that traditional blockchains can't touch. That's what the institutions want: reliability they can legally trust, and now they have it. Meanwhile, retail investors are finally catching on. Volume on HBAR surged over 600% within hours of the ETF launch, mostly spot buying. No major speculation, no heavy leverage, just investors who understand what's coming. And yet, here's what most don't realize. This launch isn't about the short-term hype, it's about legitimization. It's about HBAR quietly sliding into pension funds, hedge fund portfolios, and corporate balance sheets over time. It's about the long game. The ETF launch may have sent shockwaves through crypto Twitter, but on Wall Street, this is just the beginning of a multi-year accumulation phase. Think of it like this: while others are celebrating today's 17% spike, institutional money is celebrating a 20-year infrastructure investment. And that's why HBAR's ETF debut matters. Because this wasn't just a crypto event, it was a global finance event. The question now isn't if more ETFs will follow, it's how soon. And when they do, Hedera won't just be part of the system, it will be the system. Let's be real, most people won't grasp what just happened until it's too late. That's how every historic financial shift works. While the noise of hype coins and influencer drama fills the air, real wealth quietly changes hands in the background. And that's exactly where HBAR is right now. Because this ETF launch wasn't just about access, it was about validation. A once dismissed project now standing shoulder to shoulder with Bitcoin and Ethereum on Nasdaq's official listings. Let's think about what this means in plain English. ETFs are the financial world's language of legitimacy. They're what fund managers, institutional investors, and billion-dollar corporations understand. You can't walk into a JP Morgan meeting and say, we're buying HBAR on KuCoin. But you can say, we're taking a position in the HBAR ETF. And suddenly, it's not crypto gambling, it's portfolio diversification. That's how mainstream adoption really begins. Quietly, on paper, through systems that have existed for decades. And Hedera, it's perfectly positioned for it. Remember, this isn't just another altcoin run by anonymous devs in hoodies. This is a council-governed network with board members from global giants: Google, IBM, LG, Boeing, Standard Bank, Deutsche Telekom, each with equal voting rights. That's not decentralization by ideology, that's decentralization by design. But here's what's going to blow people's minds. This is just the beginning of phase 2. Because the Hedera Foundation already hinted that after ETFs, the next major push will be institutional-grade DeFi, decentralized finance built for corporations, not retail traders. Imagine Fortune 500 companies tokenizing assets, issuing digital bonds, or running stablecoin settlements directly on Hedera's network, not as a pilot, but as part of daily operations. And when that happens, every HBAR holder benefits. Why? Because all those transactions require network fees, which means constant real-world utility. Unlike the speculative pumps of the past, this next run could be driven by actual economic activity. Let's talk about why that's massive. In a typical speculative market, prices rise and crash with emotion. In a utility-driven market, prices rise because demand physically exceeds supply. And right now, with HBAR locked into ETFs, used for DeFi, and staked for rewards, supply is drying up fast. And yet, the average person still isn't paying attention. They'll scroll past headlines about HBAR's ETF launch, thinking, cool, but I'll wait until it hits $1. By the time it does, institutions will already own most of the float. Here's the fact that should make your pulse spike. HBAR is now the only altcoin with a live ETF, Fortune 500 governance, and active DeFi protocols. Simultaneously, not Ethereum, not Solana, not XRP, Hedera. The narrative has shifted. This isn't a future potential coin anymore. This is infrastructure. And when a network becomes infrastructure, its growth stops being a question of if. It becomes a question of how fast. So the next time you see someone doubting HBAR, just remember, they probably said the same thing about Bitcoin in 2013 and Ethereum in 2016, but now they're the ones chasing charts, while history repeats itself under a new name, Hedera Hashgraph. The Canary ETF isn't the peak of HBAR's story. It's the prologue to a financial revolution built not on speculation, but on structure. And if you're here early enough to recognize it, consider this your signal the world just turned a page and the next chapter spells one thing: adoption.